All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Wednesday, September 26th, Fed Day. And we will go through the indices. This video will be a little bit shorter than normal. It's my mom's birthday, so I've got to get out of here pretty quickly. So I will talk quickly. SPY's down 30 basis points and a bit of a reversal. Let me go, before I go on to the technicals and SPY. Just wanted to go over the major indices. SPYs were down, they were up for most of the day, so they finished down 30 basis points. The Qs gave back all their gains. They finished flat. They were up close to 80, 90 basis points, I think, today at one point on the highs of the day. So pretty decent maneuver down there throughout the last hour of the day. And small caps were worse. Small caps actually finished down almost 1% for the day, down 90 basis points. Bonds rallied pretty decently, so a flight to safety. TLT finished up almost 0.75%. Again, all these moves basically happening in the last hour. We were pretty stagnant. I don't want to say stagnant, but generally what you have during the day when you have the Fed meeting at 2 o'clock is not that much of a movement. Nobody wants to take on huge risk. Maybe some small cap names, which is what we kind of concentrated on today. So names that wouldn't be really too affected. But I'll go through each one of these charts. So SPY, we're into the 20-day moving average. We did have a reversal day. We've now had 1, 2, 3, 4 red bars in a row. We have taken out this bar, which I mentioned yesterday, but we've got support right here. So do I change my stance? Not really. Maybe getting a little bit more. I don't even want to say defensive. I mean, what I've been doing the last couple of days is taking profits on, with the nice market action that we've had. So, do I have any major hedges on right now? No. I've just been allocating more into cash the last couple days. The one trade that I did today. So let me talk about the indices first, and then I'll get into my trades and a little bit more strategy. But here's NASDAQ, and the reversal might be a little bit more apparent considering these were bigger ranges. But, all in all, we're still above the short, as ugly as this bar is. And I've kind of learned with these bars in NASDAQ not to go crazy with analyzing them. Yes, we did not close on the highs, but we didn't lose anything, in terms of the technicals. So, like I said, you kind of chalk it up to these Fed days, which the market just doesn't seem to like Mr. Powell. I think every Fed meeting, the market has ended up either reversing to the downside or just completely in the red. Apologize, I don't have all the data on that, but I know that the market just doesn't seem to like the guy. And I don't even think there was that much, that much said that is different than consensus, right? Everybody knew that they were going to raise interest rates. And of course, the path of the interest rate hikes are going to be a little bit different. I mean, they seem pretty committed to wanting to get to more of a normal rates, and they want to raise rate. They seem to want to just continue to kind of raise rates at a normal pace. So I don't think that's anything that alarming. I don't think we got anything majorly new news, unless I'm missing something. Maybe one extra rate hike coming. In 2000 or in next year. So and maybe in another year out. Here it looks a little bit different. Small caps, they've actually broken the 50-day moving average. So, we've been monitoring this every day. This looks a little bit different than SPY. What concerns me here is that sometimes I use these small caps as a leading indicator of kind of risk on or risk off. So this was a decent move down today, and we'll have to watch for that a little bit further. That could spread a little bit and could be a little bit of a leading indicator. So for me, moving more into cash, through the week, I've had a really nice September, especially the last 2 weeks. So, I'm up for the month. I've been up, I think now, so knock on wood because we still have a few days left. But I've been up in P&L and in my trading account now several months in a row. So I've been doing a good job. Again, I don't want to jinx myself because I do get superstitious with this stuff sometimes. But, that's just basically, I think I've just been doing the right thing with, just taking profits, especially in my shorter term plays, and just switching a little bit more over to cash. And then, making sure that I have ample cash available to buy the next dip. So, One of the things, I wanted to talk a little bit more about the relationship between small caps and large caps. Take a look at this. This has been going on since since right at the rebalance of the small caps, and I have a rebalance video out that I shot over the weekend, which you can find on my YouTube page. But notice that they've just been trending down, small caps, since they peaked in June. It's been a pretty decent move down. So, what's starting to outperform a little bit? International securities versus U.S. So, this right now is a bounce. We don't know if this is going to be a sustained bounce and a trend change. I would watch for this 50-day moving average. This is EEM versus SPY. We could also look at another CIX that I have here, or relationship between two different indices. Is also, so that was international emerging markets. Now I want to go ahead and look at international developed markets. If Bloomberg will cooperate with me, SPY, and then let's do EFA. So long SPY, and this actually looks like more of a trend change here. Again, it's just the opposite way around. But you could see how much international developed markets and what EFA is. If you remember, I talk a lot about this, but in case you're not familiar with what EFA is, it is international developed markets. What are international developed markets? Basically Japan and Europe. That covers the majority of that ETF. But you could see since just the beginning of September, the first week of September, really this EFA has been outperforming. And if you look at these, we got long a couple of the Japanese ETFs. I got long DXJ and options. And you could see this. I mean, this is basically a week ago, and this has really had a nice move, or a little bit more than a week ago. I'm still in HEWJ. The reason why it's gappy on here is you have to remember what this ETF holds. They hold local securities in Japan. When are the Japan markets open? They're open when ours are not. So if there's a big overnight move, it gaps, right? And it should have small intraday moves because Japan is closed while the U.S. markets are open, right? So that's why it looks like a tough chart to kind of look at. But it's been moving pretty nice here in EWJ, which is HEWJ, which was up another 20 basis points. I would be targeting this 34.70 level. But yeah, so that's what's moving. And the reason why I'm covering this is I always, my goal is to stay in front of trends. I want to be talking about things. I call it being one step ahead. I want to be in front of when, the financial media is covering this. But this has been going on now for a couple of weeks, and I've been slowly positioning more into international securities over the last couple of weeks, and Japan is one thing that I'm long. All right, so that's kind of a summary on the market. I talked about the Fed meeting. I talked about the strategy of moving more into 52-week highs. It is funny. I mean, you could use a lot of sentiment gauges too. One of the things that I use is just looking at reading Twitter. Right? I mean, I follow a lot of great people on Twitter, but overall, like when people start to give each other high fives and so forth, that's basically when the market is breaking out and people are really celebrating. Like that's the time usually it's a nice contrarian indicator to take some money off the table, right? So we've talked about this before, and I think it was in one of my recaps. When the S&P and when everything starts participating to the upside, if you're in options and shorter term options, take some profits. And be smart about it. So what did I do today in terms of trading? I put on a couple really small trades. My whole trading plan for the day was not to really overcommit ahead of a Fed meeting. I just know that, and I hope some members got through this too today. Rather than a few members did a little bit of scalping here in the beginning of the day, but I said all along today that really I wasn't going to add much risk into today. So I actually bought puts, something that I don't do every day, but I just thought these Fed meetings, and you could keep count because of course we'll have another Fed meeting, but especially the ones with the press conferences, the initial reaction that we normally go in doesn't always end up being the way that we go. So it's a little bit of a whipsaw, but this has been, this is not anything, that intelligent. It's just pattern recognition. And, when the initial headlines come out at 2 o'clock, the market seems to go one way. And then once the press conference starts and really you get to the end of the Q&A, it goes the other way around. So, this was exactly what we've been seeing every time, and it's what I mentioned 2 or 3 times today in our midday session. So that's the value you get as a Tribeca Trade Group member. We really analyze this stuff so that you're not caught off guard, and that's the main thing, right? If you could protect yourself a little bit, which is what I did. I didn't buy puts here. I bought puts right in here, SPY puts, and they. You could see, and I'm always happy to show for free what my trades were. I don't, I have complete transparency to what I do every day. But yeah, I mean, here was my SPY order, which I bought those in SPY puts. Again, I'm not really looking to make money. This is a hedge for some of the other things that I've got going on. But a lot of exits today. I did a small trade in Momo. I did a short put spread, so a bullish put spread in Tesla. I took that off today. I sold that for $2, bought it back here later. I put on a couple starters. This Goose trade, we'll talk a little bit about this. Pretty much a home run trade. And, this was not a huge trade for me. Again, full disclosure. But it was something that I had been watching and I took a shot at. So finished up 9.7%, pretty much unfazed. That's nice relative strength. And I think Goose has more to go. I held on to my very last piece to try to get a big winner. I'm in a short-term option. I'm in October, which I always view as dangerous to kind of hold October options overnight. But when you take 3 targets, and you have a trailing stop, you feel a little bit more at ease. Another trade that I put on recently that I was able to take a target today was Zoetis. Even though, this is why you take targets, right? I mean, you don't know how the candle is going to look, but I took a target here on the high of the day. This is the Zoetis. This is a call spread ZTS, October 90.94 call spread for $1.80, paid 120. Yeah, so that's pretty notable for the day. I also, if you saw some of the other trades that I entered, I think we're going to start to see earnings positioning a little bit. We saw that in Google today. There was a nice little Google trade that covered. They always trade Goog, by the way. They don't trade Google. But there was a nice trade here for the November 1190 call. So basically right at the money. So I think, you can start to think about, and again, this is the things that we go over in the trading room every day to kind of get people prepared for what the next couple weeks are going to be. Remember, all those buyback plans that have been on full steam are going to be off in about a week or so. But that doesn't mean that some names don't have the possibility to run into earnings. Google, I think, is no buy signal yet. It needs to come out of this. I also think if you go to the 1 hour bar, it's got to stay above, let's see. Yeah, we're still above value for the week, so 1180. Same thing in Netflix, but we've got some ideas for kind of run into earnings reports trades. 269. We'll see where Amazon finished as I'm going through all the FANG stocks. It did take right at this. So this is that's nice because that's exactly what I sent out yesterday on Twitter regarding this 1 hour bar in Amazon. So I said all along my target was going to be 1180. I had 2 trades on in Amazon. I was long a call spread. I took that trade off today for profits, and I was short a put spread. I still have the last piece of that short put spread on, and I basically waited till the end of the day and added a new trade, small trade in Amazon because, This was the target that I thought was realized, and it's got to get back above 1980 is the level to watch. I think if it happens to stay above there, then I will put on a little meatier trade than that small trade that I did at the end of the day. But I think that's going to be interesting. Also, Biotech. Let's see where Biotech ended the day. It was very strong early. In my screw up trade of the day, not of the day, but of yesterday, was I took off my long IBB trade. And, well, it finished flat, so now I don't feel so bad. But it was up, oh, no, it finished up 30 basis points. It was up 1%. I would have taken another target if I had that trade on. And this is VRTX, which I took off yesterday. So sometimes you get a little bit unlucky, right? The other damaging trade that I did not get out of today, but it's not ENDP. I always confuse these names. MNK is hanging on by a thread. It actually closed below the 50-day moving average. I looked at it with an hour to go. Was just kind of fell off my radar with the market moving fast. But I sent out a video last week, trade idea. This one's not going to work. And remember, I went into stock in this one rather than options because I thought the options were too expensive. And I think so far that was the right decision because this will end up being a small loser rather than a big loser in front month options. So if it happens to, I think actually it's giving me a stop signal now, so I should be out of that trade. I will probably take that off tomorrow, especially if it starts to go red again. So that's MNK. So again, I like to talk about both the winners and losers. Nobody has all winners. What else looked interesting? Goose. I talked about Shaq yesterday. I still think Shaq can maybe get to 65 bucks. All these candles are going to look a little bit weird. CVNA had some really good potential in the beginning of the day, but it gave back most of the candle. So, but I would keep this name on your watch list for tomorrow. This is Carvana. This is the disruptor in the used car area. So I would keep that one in mind. What else? And then Grub is another one that I've been watching. We don't have a position on in this one, but I like it just sitting up here. And maybe tomorrow, now that the Fed, like I said, I really didn't want to put on any major exposure, so I've got a couple names that I'm looking to possibly get involved in tomorrow. All right, that is it for today's recap. Thanks for watching very much, and have a great night.